Here are the crypto top headlines covered in this video. BlackRock and JPMorgan have acquired more than 7.5 million XRP, coinciding with the upcoming listing. Next, SEC kicks off comment period for planned Franklin Templeton Bitcoin ETF. Also, buy the rumor, sell the news. Bitcoin ETF may spark TradFi sell-off. Plus, the IMF is going into panic mode as public chooses crypto over CBDCs. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, BlackRock and JPMorgan have acquired more than 7.5 million XRP, coinciding with the upcoming listing. In the ever-changing realm of cryptocurrencies, the focus of discussion and speculation has shifted towards institutional involvement. Recently, a confidential report has surfaced shedding light on JPMorgan's substantial holdings in XRP, a prominent digital asset in the blockchain and cryptocurrency sphere. This article explores the details of the leaked report, unveiling the implications of JPMorgan's significant investment in XRP and its potential effects on the financial landscape. Understanding XRP's role in the cryptocurrency ecosystem. Before delving into the report, it's essential to grasp XRP's role in the cryptocurrency ecosystem. Developed by Ripple Labs, XRP is designed to facilitate swift and cost-effective cross-border payments, distinguishing itself from cryptocurrencies like Bitcoin and Ethereum. While the latter primarily serve as value stores and platforms for decentralized applications, XRP aims to bridge the gap between traditional financial systems and blockchain technology. JPMorgan's substantial XRP holdings. The leaked report, purportedly from an anonymous insider within JPMorgan, discloses a significant revelation. The banking giant has quietly amassed over 7.5 million XRP, constituting more than 7.5% of its total wealth. This revelation underscores JPMorgan's confidence in the long-term potential of XRP as an investment. However, the absence of official confirmation from JPMorgan introduces an air of mystery to its involvement with XRP, leaving room for speculation and intrigue. JPMorgan's crypto move and shifting industry sentiment. JPMorgan's entry into cryptocurrencies, specifically XRP, carries several implications. Firstly, it signals the increasing acceptance of digital assets by traditional financial institutions. XRP's focus on facilitating international transactions aligns with JPMorgan's global presence, potentially offering a more efficient solution for cross-border payments. Moreover, the leaked report hints at a potential shift in investment strategy, with XRP being considered more profitable than the long-standing favorite, Bitcoin, signaling changing sentiments within the financial industry. BlackRock's interest in XRP. JPMorgan is not alone in its interest in XRP. According to a report by Investing, BlackRock, the world's largest asset manager, is also exploring the inclusion of XRP in its investment portfolio. While BlackRock has yet to make an official announcement, the mere mention of its interest carries significant weight in the crypto industry, given the company's reputation for strategic and well-informed investment decisions. XRP's significance amidst legal battles. The ongoing legal battles between Ripple Labs, the parent company of XRP, and the U.S. Securities and Exchange Commission add another layer of significance to XRP's prominence in institutional circles. The SEC's allegations have created uncertainty around XRP's classification as a security, prompting institutions to reassess their cryptocurrency investments. RNT token, and Rencom Network's emerging role. In this context, Rencom Network's RNT cryptocurrency emerges as a notable player. The report suggests that RNT is expanding into over 130 plus countries, including the United States, and has received internal confirmation of its non-security status from the legal team. This positions RNT as an attractive option for investors, particularly amidst the legal uncertainties surrounding other cryptocurrencies. Rencom Network's imminent listing on a major exchange, as hinted on their official Twitter page, reflects the growing interest in an alternative cryptocurrencies. The announcement of another listing on an exchange with over $1 billion in daily trading volume adds to the anticipation surrounding RNT. Conclusion: a shifting landscape in cryptocurrency investments. In conclusion, the leaked report on JPMorgan's substantial XRP investment and BlackRock's potential interest highlight the evolving landscape of cryptocurrency investments. Traditional financial institutions are increasingly exploring digital assets, and legal developments surrounding XRP play a pivotal role in these decisions. The rise of tokens like RNT from Rencom Network underscores the diverse and dynamic nature of the cryptocurrency market, offering new opportunities for both investors and institutions. As the cryptocurrency world continues to evolve, staying attuned to the strategies of major players is essential in navigating this transformative industry. Our next top headline: SEC kicks off comment period for planned Franklin Templeton Bitcoin ETF. Agency's decision to start comment window earlier than expected could be bullish for spot Bitcoin ETF approval in January, industry watchers say. The U.S. Securities and Exchange Commission has initiated the comment period for Franklin Templeton's spot Bitcoin ETF proposal. This move was initiated earlier than some expected, with the SEC now actively seeking public feedback. New SEC filings could signal its willingness to close out the comment period on such funds ahead of a potential January ruling on Bitcoin ETFs, some segment observers said. A Tuesday disclosure indicates the regulator has chosen to institute proceedings to determine whether to approve or deny the Franklin Templeton ETF. The Commission seeks and encourages interested persons to provide comments on the proposed rule change, the filing states. The SEC has a 240-day window to consider each of the spot Bitcoin ETF proposals from the day it is published in the Federal Register. During this time frame, specific deadlines occur at intervals of 45 days, 45 days, 90 days, and 60 days. At each of these milestones, the SEC must file a response either approving, denying, or postponing a decision on the proposal. Franklin Templeton, a traditional finance giant with roughly $1.5 trillion assets under management, jumped into the Bitcoin ETF race in September. The Franklin Bitcoin ETF proposal was published in the Federal Register on October 3rd, and the SEC delayed its decision on the product in a November 15th order. While another filing related to this proposal wasn't due until January 1, the Tuesday order signals the SEC might be looking to fast-track the process in preparation for a potential mass ruling on spot Bitcoin ETFs. They might have chosen to do this early so they could have the comment period end before January 10th in order to approve everyone at the same time, Van Buren Capital General Partner Scott Johnson said in an X post. And it looks here as though Scott was replying to James Seifert's tweet of, "Update, wow, SEC went super early on Franklin. They weren't due for another decision until January 1st. Notably, Franklin is the only issuer who didn't submit an updated S1 yet. Wonder if that has any impact here." January 10th is the date by which the SEC is set to rule on a spot Bitcoin ETF proposed by ARK Invest and 21 Shares. Industry watchers have pointed to this date, noting the securities regulator could approve all spot Bitcoin ETFs at this time to avoid giving any one product a first-mover advantage. The SEC could also choose to deny such proposals, a move that would be consistent with previous rulings over the last decade. Along with the order related to Franklin Templeton's proposal, the SEC filed a separate order seeking comments on the proposed Bitcoin ETF from Brazil-based asset manager Hashdex. This delay on Hashdex all but confirms for me that this was likely a move to line every applicant up for potential approval by the January 10, 2024 deadline, Bloomberg intelligence analyst James Seifert said in a Tuesday X post. A spokesperson for the SEC did not immediately return a request for comment. Our next top headline, Buy the rumor, sell the news. Bitcoin ETF may spark TradFi sell-off. Bitcoin retail investors may end up with a hot potato if the spot ETF go-ahead plays out like gold 20 years ago, analyst considers. Bitcoin may suffer when the United States approves the first spot exchange-traded fund, a new warning says. In a thread on X, on November 28th, Joshua Lim, head of derivatives at capital market firm Genesis Trading, predicted a volatile start to 2024 for BTC price action. Bitcoin ETF approval, retail may be left holding the buck. Lim said that Bitcoin is already a target for traditional finance, or TradFi, which is betting on winning big out of the spot ETF approval. We know TradFi guys / macro tourists are already long crypto ahead of ETF news. They've built the position over the last few months and are now paying handsomely to roll in it. The thread explained alongside data covering open interest on CME Group's Bitcoin futures. Commitment of traders data showing asset managers increased length by about $1 billion since end of September. Open interest of CME Bitcoin futures by trader category long. The signs are there in the performance of the first Bitcoin futures ETF, BITO, as well as stocks of crypto firms such as U.S. exchange Coinbase, or Coin, the latter up 250% year to date. While generating buzz and emboldening the institutional adoption narrative behind Bitcoin, the party could quickly fizzle once the spot ETF is given the green light. This, Lim and others suggest, would be a classic buy the rumor, sell the news event. What does it all mean? He queried. TradFi is already long and probably thinking about when to exit this trade around ETF announcement, expect retail to pile in, and expect TradFi guys to exit. 2021 tops in basis were prior to Coin and BITO listings. A gold ETF rerun? Lim is not alone in wondering if ETF approval day will ultimately leave lay investors disadvantaged. Responding, James Stratton, research and data analyst at crypto insights firm CryptoSlate, channeled history to support the concerns. When the gold ETF, GLD, was introduced in November 2004, it opened around $45 and dropped to approximately $41 by May 2005. However, it saw an impressive 268% increase over the subsequent 7 years, he added in a CryptoSlate analysis on November 28th. On a more optimistic interim note, popular trader Jelly remarked that institutional interest had not been dented by the week's news stories, including the $4.3 billion settlement between the U.S. government and the largest global crypto exchange, Binance. CME futures, he stressed, continue to trade at a premium over the Bitcoin spot price. Jelly tweeted, Interesting to note that throughout all of the courtroom drama, institutions are accumulating Bitcoin. The CME currently has a greater than $350 premium to the Bitfinex spot price, and it has consistently traded at a premium for well over a month. Jelly also tweeted, "Not sure why everyone is so surprised at how the feds are coming out in full force against crypto. Almost as if they don't have a long-standing history of killing any threat to the global reserve currency status of the dollar. Kill the competition, roll out the BlackRock ETFs." Our next top headline, the IMF is going into panic mode as public chooses crypto over CBDCs. South Koreans will next year have the opportunity to use deposit tokens based on a CBDC or central bank digital currency through a pilot program operated by the BOK or Bank of Korea and financial authorities. 100,000 individuals will purchase goods with deposit tokens issued by commercial banks in the form of CBDCs, similar to using a voucher at stores. The BOK's announcements come just 1 week after Kristalina Georgieva, managing director of IMF, or International Monetary Fund, urged countries to be more proactive in their push towards CBDCs. So far, 11 countries, with some in the Caribbean and including Nigeria, have launched CBDCs. More than 120 countries are exploring CBDCs. During a speech in Singapore, Georgieva said, "We may be at a point where the public sector needs to offer a little more guidance, not to crowd out, not to disrupt, but to act as a catalyst to ensure safety and efficiency and to counter fragmentation." The IMF also recently published its first installment of a virtual handbook to help countries implement interoperable CBDCs. Nonetheless, countries that have tried to implement CBDCs have seen little adoption. Likening the efforts to a nautical journey, Georgieva said, "If anything, we need to raise another sail to pick up speed. The world is changing faster than most imagined." The IMF is scared that failure to agree on a common platform for CBDCs could lead to a vacuum that would likely be filled by cryptocurrency. The IMF's warning comes at a time when cryptocurrencies are gaining more mainstream attention and adoption, suggesting they may eventually become a viable alternative to traditional fiat currencies. Cryptocurrencies could fill the vacuum left by lack of agreement. If cryptocurrencies, which are decentralized and not tied to any government or central authority, fill a vacuum left by a lack of CBDCs and become the preferred means of exchange for international trade, then the entire global financial system could be revolutionized. Cryptocurrencies can offer faster and cheaper transactions than traditional financial systems, with the added benefit of increased privacy. The IMF warns that this could create chaos in the financial markets. However, in a world where governments and central banks manage the global economy already, chaos seems to pretty much be the rule anyway. War, inflation, currency collapses, corporate welfare, corruption, etc. The IMF warns that crypto leads to market manipulation, money laundering, and other criminal activities. But this is just a boogeyman, as all of that takes place anyway in the world today. Cryptocurrencies are typically built on decentralized networks, such as blockchain, where no single authority has full control. This decentralization can provide transparency, security, and immutability as transactions are recorded on a distributed ledger. In contrast, CBDCs are centralized and rely on the control and oversight of a central bank or government, and therefore they are less secure or prone to manipulation. Some cryptocurrencies, like Bitcoin, allow users to conduct transactions pseudonymously without revealing their real-world identities. This aspect appeals to individuals concerned about privacy and the potential misuse of personal financial information. Just like CBDCs, cryptocurrencies can facilitate cross-border transactions without the need for intermediaries or currency conversions. This accessibility can be particularly beneficial for individuals in countries with limited access to traditional banking services or unstable local currencies. CBDC adoption might vary from one country to another, limiting their global accessibility. Cryptocurrencies have spurred innovation in various areas, such as DeFi or decentralized finance, NFTs or non-fungible tokens, and smart contracts. These advancements have the potential to reshape traditional financial systems, increase financial inclusion, and empower individuals with new economic opportunities. While CBDCs may introduce certain features to enhance financial services, the pace of innovation and experimentation may be slower due to the centralized nature of their development. The IMF is scared of crypto. The IMF fear of crypto is palpable. Georgieva added, "There has to be a very strong push for regulation. If regulation fails, if you're slow to do it, then we should not take off the table banning those assets because they may create financial stability risk." The IMF has expressed a range of views on cryptocurrencies, and with quotes such as the above mentioned, it might not be inaccurate to say that they are scared of them. The IMF can voice concerns about cryptocurrencies, such as their potential for money laundering, terrorist financing, consumer protection issues, and market volatility. But what they're perhaps actually scared of is their potential to improve financial services and promote financial inclusion. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.